So my name is Surinder Kaur. I'm a licensed CPA working on tax compliance for over 5 years now. My overall work experience is around 13 years. I started my career with BPO sector, worked in BPO sector for 8 years, and then finally decided to move into public accounting by taking up the CPA course. I had 8 years of gap from my BCom graduation to starting my CPA classes in 2013. Mahamkali, I would request you to please log out and log in back to see if you can hear me. All the other panelists are able to hear me all right. I mean, anybody who's there in the group who's looking to change their industry, you can always do that. Have the courage and the determination to switch. So that's what I did after working for 8 years in the BPO sector. I changed my industry, did my certification. After my CPA, I did my MCom to get my license. And then I moved into the compliance sector. So my first job after doing my CPA was a research writer in one of the publication called CCH IntelliConnect. And I used to write on tax court cases, revenue procedure, revenue rulings, and any of the documents that was released by the Internal Revenue Service. Then I worked for a small CA firm in India who were catering to the US clients. And then finally, I got an opportunity with Deloitte and been working with Deloitte for over 2 years now. I usually cater to the clients who are investment management companies. So these companies are not into the big business of regular trade or business. However, they raise funds and invest money into other businesses, and that's how they make their money. The kind of entity that I do compliance for is part. So that's a little bit about me. When we cover the syllabus, the regulation. So basically the regulation is divided into two parts. For our examination, there is the tax part and there is the law part. As a CPA, you can venture into different profiles. So you can be a tax consultant. You can be a person who can represent your client in front of the IRS. You can, be a preparer like how I am, a practitioner, and so on and so forth. If you want to go into, doing financial accounting and reporting, you can do that. If you want to go into auditing, you can do that. So CPO opens a lot of venues for you, and based on your interest, you can venture into those fields. So I was always inclined towards law. However, I'm not a lawyer, but then when I do my, tax compliance for the investment companies, there is a lot of law that I have to read in order to interpret the new provisions, how the new law is going to be applicable. So you start with the with the regulations, with the tax codes, and then you interpret that and then you apply it into your business. Yes, I am based in Hyderabad. So for our lectures in the next 2 months, we will be covering the taxation part, not the law part. So the taxation part is from Reg Chapter 1 to Chapter 6, and the law part is Chapter 7 and Chapter 8. I mean, there are some people who focus a lot on the tax part and they, just rush through the law part. They don't pay a lot of focus. Remember, Mayank, the reason that we are not covering law because it's a lot of theory and we believe that that's something that student can, do by themselves. And then you also have access to Becker's lectures, which you can go through. So we think that's sufficient enough. However, we give online sessions for the tax part because there may be certain concepts that may need more attention. There may be certain questions which may not be clear. So we only cater to the tax part in the regulation lecture. If you were not informed by, about this by Shripal, then my sincere apologies for this, but I want to make this very clear in my first lecture itself that we will be only covering tax, which is regulation 1 to Chapter 6. All right. So now, as I was talking about that, a lot of people will put their focus on tax and not so much on law. Please remember that the testing of business law can be somewhere between 10 to 20% of your total questionnaires, and your passing score for the examination is 75. So if you do not give focus to that section, it is very, very difficult for us to reach that landmark of 75 to clear the examination. So please give equal weightage to all the topics. This is how the sessions are going to be. Now let's talk about a little bit how the examinations are structured. So the reg exam is for 4 hours. You may find whatever I'm talking a little bit repetitive. I know Shripal had said, taken a session yesterday to walk you through how the examination structures are and stuff like that. But for the benefit of everyone, I'm just going to give you a brief on it. Okay, I have got a question on the Q&A section. Someone is asking, indirect tax is not there in CPA. If so, are there any no indirect? There are, as I mentioned in the starting of the session, there is indirect tax in the USA, there is sales and use tax, there is franchisee tax, but that's something that is not required for our CPA perspective. It's not part of our syllabus. All right, so as I was mentioning that the examination is of 4 hours, and you have multiple choice questions and task-based simulations. Multiple choice questions, they would be around 76 questions, and there are 2 testlets that you would be getting, 38 questions of each testlet. So remember one thing, that this 38 questions, you can go back and forth. So when I advise my students, like if you are confident on a question, answer that question and move on to the next one. If you are not confident on that question, there is an option to flag that question. Flag that question and move on to next one. Because first of all, understanding the basics. Second of all, remembering them. Third of all, applying them. And fourth, time management. These all 4 will go hand in hand. So if time management is not there, even though you are conceptually very strong, you will still not be able to finish your entire examination, and then, passing would be difficult. Not that you lack knowledge, but then you had poor time management. So when you get a testlet, try to answer the questions that you know and come back to the questions which you are not sure of. And then, like, if you think that you have no clue what could be the answer, do not spend time brooding over, what is going to happen. You will have to move on to the next testlet, but make sure to answer that question, because there is no negative marking. That's the best part. If you do, eeny, meeny, miny, moe, and then select one of the questions, answer which you don't know will be correct or not. And if it's correct, you may end up scoring what it's needed for you to clear the examination. So that's about the testlet for the MCQs. So there are 2 testlets of 38 MCQs each. You can, once you finish one testlet and move on to the next one, you cannot go back to the first testlet. So you will have to make sure that you finish all the 38 questions and then move on to the next testlet. After you finish the 2 testlet, there is a 15 minutes break that is provided. So it's up to you if you want to take the break or if you want to continue with the 3rd testlet. I mean, that's again an individual decision. I would say that take a break, go to the washroom, drink water, relax, rejuvenate. If you are not having the best of the time, if you're not having, if you're not confident of all the questions that you have answered so far, it will just give you that time to think, and okay, if this did not go that well, let me try to give my best for the task-based simulation. So there would be 8 task-based simulations. Now these simulations can be from tax and can be from law. So we don't have an exact number, but I would say that you can expect 1 or 2 questions from law, and most of the questions will be from the tax part. Now, by the name itself, simulation, they are trying to create some real-time scenarios for you to analyze the situation, apply your concept, and show them how competent you are. When you become a CPA, how competent you are to handle those situations. So I would say that when it is, the multiple choice questions, we may see some similarity of the kind of questions that we have in our Becker's material. If some students are following, other questions, other question banks like Wiley or anything else, they will see that there is some similarity in the questions. Maybe just the numbers are changing and stuff like that. But when it comes to simulations, AICPA is like kind of innovative. You may, you know, you may not get the exact kind of questions that you do in your Becker's material. So in the simulation section, you have to be very, very thorough and clear with your concepts. At the same time, you should know how to apply those concepts. And usually, it's not one concept, but it's the a synopsis of two, three, four concepts being applying together. We have a question here, ma'am. It's like a number of Q's in Testlet A is answered correctly. Yeah, that's somewhat true, Bhavna. Like, based on how many questions you answer correctly in your first Testlet, your other Testlet is being designed like that. So if you answer the first Testlet excellent, then you may get a difficult one in the next Testlet. But that doesn't mean that you will not set your best foot forward, right? Because this is an exam that is being designed by the AICPA, and the software does, pick up the question for you. So there is no right and wrong. You will have to make sure that you give all the answers to the best of your ability. Yes, I would say that Becker has enough MCQs and Testlets. It's all about practicing. At least practice twice these MCQs. Gauge your performance by seeing how many questions you are getting wrong. What we tend to do is, like, if we pick up 20 questions, we try to answer those 20 questions, putting a timer. And then if something goes wrong, we really don't go back to see why the question went wrong. So reading the explanation of the wrong question is equally important. Reading the question, even if you've answered a question correctly, still go back and read why the answer is correct, right? And this, you have to do it at least twice before writing your examination. If you score less than 75 to 80% in any topic for which you are doing your Becker's MCQs, go back and read that topic again, because that means that you are not thorough with that topic. There is no negative marking. So, you don't have to worry. Even if you don't know an answer, please make sure that you answer it. Yeah, simulations will be, so the first two Testlets are the multiple choice questions, and the next three Testlets are simulations. So the third Testlet will be of 2 task-based simulations. The fourth Testlet will be for 3 task-based simulation, and the fifth Testlet will be for 3 task-based simulations. So you will have 8 simulations altogether. However, they are divided into 3 different Testlets. So that means that if you do the first 2 Testlets, you move on to the fourth Testlet, and then you cannot go back to the third Testlet. Now, one thing that I would like to reiterate here is that when you are doing the task-based simulation, you have the option of authoritative literature on the top, where you have your calculator and stuff. The simulation structure is similar to what we have in the Becker software. So there is an option of authoritative literature. If you have time and you are not sure of a question, please use the authoritative literature to find the answer out. You will definitely get one research question. Now, why can any of the panelists say why research question is provided to you when you are giving your regulation examination? And what can be the authoritative literature when it comes to regulation? Okay, excellent. I have got some right answers here. So yes, Authoritative literature when it comes to regulation is the Internal Revenue Code. All right. Yes. So Rajat has a question here. He's asking, can I edit my question on Testlet 1 and submit for Testlet? So Rajat, you can make the changes to those questions as long as you do not submit the Testlet. Once you submit the Testlet, you cannot go back. All right. So let's say there are 38 questions. I answer question 1, 2, 3, 4, 5. 5 I answered and then I moved on to 6. Then I realized, okay, whatever I have selected for answer number 5 is not correct. So I can go back and change the answer number 5 because I'm still on that testlet. Once I submit, I hit submit and I move on to the second testlet. I cannot go back to the first testlet and make changes. No, there is no choosing and opting to do simulations first and MCQs later. Unfortunately, AICPA is not that kind. So we will have to go by the structure that they have designed for us. So the first 2 testlets will be MCQs. I'm sorry, but you don't have a choice. You will have to do the MCQs first and then only move to the simulations. Yes, Uday, all the information is available on the IRS site. There are a lot of publication which talks about different regulations. So you should always, whenever anyone is looking for additional information, please do not Google search and read anything from the random website. Please always do your search through the authoritative sites like, Internal Revenue Code. They have a lot of publications which explains things with example, and that's the best to use if you have further doubts or need additional. Somewhat, yes. How you perform on the first testlet determines what kind of questions you would be receiving on the other testlet. So, that's basically designed by the software. I can't much say much on it, but yes, that's how it is. Of course, Rajat, there are amendments to the US tax like how we have in Indian tax. So, like if you remember, like if anyone in the panelist works in the tax environment or does any kind of tax and compliance, there was a major change which was done by the Tax Cut and Jobs Act. So a lot of, the way things were getting taxed changed. There were a lot of new provisions that were added, that there were a different code section that was implemented. One of them being the section 199A, section 163J. So all these different sections were implemented, and some of the sections, because they were impacting the other sections, were modified and amended. So those things are similar to how we have, the amendments will be there in any tax culture or any tax environment. Yeah, we have the CARES Act. I mean, CARES Act is the most recent one. I don't think we will be covering the CARES Act in this syllabus. It won't be in the new syllabus till October, I guess. But yes, we will be doing the Tax Cut and Jobs Act, little bit of the changes that happened in 2018. How do I remember section numbers? Well, ideally for a CPA, you have to remember very, very limited sections. All right. Some of the sections that you need to remember is section 199A, section 1231, section 1245, section 1240. These are the 4 main sections that you are required to remember. However, you are not required to remember these sections, but when we work in the compliance sector, we tend to learn these sections because we work on those line items. So, if you have to research something like someone mentioned that we'll be cover depreciation amortization. Yes, we will cover depreciation amortization, in chapter 3, which is the cost recovery session. And depreciation and amortization is a bit different how it is calculated for tax per se than what it is being calculated for GAAP per se. So when, if someone is doing depreciation, and I have a question on how the modified cost accelerated system works, where do I get that information? If I know, okay, the depreciation section is section 178, I can go to the section and then, go to a relative revenue procedure or a revenue ruling, or I can go to the IRS publications and read more about it. But for the CPA exam per se, you don't need to know the tax code. But what you need to know is how to search them. So we will have a special session which will be conducted, at the very last. Once we are done doing all the topics, I will be covering, taking up a special session on how to do your research simulations, because it is very easy to score on those simulations, but unfortunately people don't know how to do the research. So that's something that we would be covering in our lecture as well. All right, so that's about how the exam structure would be. Well, the suggestions to, how to give your examination is again on one's, individual. I would prefer, this is my personal preference, that please do all the lectures and then maybe focus on two subjects. Like how I gave my examination, I combined FAR and audit, and then I combined reg and BEC. So I gave these two subjects together, because I think that FAR and audit, there is a little bit of overlap. Regulation and BEC, they are two separate subjects, and there is not much overlap with the other subjects. So that's how I felt, and I gave my examination. But you will be in a better position to take that decision once you hear all the lectures and see what's more comfortable for you. I mean, some people would like to take a easy subject first so that it can boost their confidence. Some people would like to, give a difficult subject first so that they can get rid of the difficult one and then focus on something that they consider not so difficult. But it's all an individual choice, which you can, decide by going through the lectures, by going through the syllabus, so on. And everything will be covered in the chapters, Mayank. So one more thing I would like to bring to your attention is that you will see that there are certain questions in the Becker material which do not have a direct reference to the material in the book. So please focus more attention to those questions and read the explanation on those questions, because they may not have covered that in the, in the syllabus, but because they are important, they have listed them in the questions that they have in the Becker software. Okay, now I will move on to the content area. Before I move on to the content area, anyone else has any questions on the exam structure? We will try to cover, Mayank. Okay, guys, does anyone has any other questions on the exam structure? Can I move on to the content area allocation? Yes, Beckers update their software as and when is needed. And they have to update it because tax is a very dynamic, subject. A lot of things are subject to inflation, and the numbers keeps changing. So they make sure that their software and their questionnaire and their content is up to date. Yes, authoritative literature can be used for task-based simulations. They are only available for task-based simulation, Mariam. They are not available when you're doing your multiple choice questions. All right. So now we will move on to the topics that we have. So if you look at your table of content, we have 8 chapters. However, what is the weightage for these chapters, and how much testing can be done from the each kind of. Okay, Sabina, I have been asking questions to all the panelists. Do you feel that I have not answered anyone's question and being biased here? I'm sharing the chat window here as well, so that and everyone can see that the questions that are being posted. And I feel that I've answered most of the questions, but let me know if I've missed out anyone's questions and someone is feel that I'm being biased and not answering their question. I am sharing my screen here. Let me just stop share and share it once again. Okay, I'm not sure why it's not showing the chat screen, because it's on the, I have put the chat screen on the sharing window. Mariam, you can use the authoritative literature for all kind of simulations, and not just okay, let me just see what's the problem here. Uday, we don't get into all that. 5471 guilty calculation is very, very high level. For the CPA examination, we would not be covering all that. Guys, please hold on to your questions for 2 minutes. People are not able to see my window, so let me figure out what's happening here. Okay, I have just called the Simandhar team to see what's wrong. I mean, is anyone able to see my screen? I have Reg 1 individual taxation page and the chat window, which I'm sharing currently. Okay, guys, what Sabira is asking everyone is to post your question to all panelists so that everyone can see the question and there are no repetitive question. If I have addressed something, then it's visible to all panelists and they do not post a similar question. Okay, so are we good here? Can I move on to the content part? Okay, thank you so much. So now let's look at what can be tested in your examination and what weightage it can have, what kind of question weightage those kind of topics will have. However, Katubudi would like to know who all are working in public accounting. Well, this can be a very open-ended question because public accounting covers everything. It is not just taxation. But if you want to know someone specifically working in taxation, I would be helpful for our sessions so that we can ask those people to share their real-time working experience. So I work in partnership, so I will definitely share my real-time experiences when we do the partnership taxation. However, if people are working in other compliance field like individual taxation or S corporations or corporations, then I would welcome those students as well to share their experience and examples for the benefit of the others. So now let's move on to what can be tested in our examination. All right. So first is your business law. So business law can be tested somewhere around 10 to 20% of your total questions. So 10 to 20% means like if there are 100 questions, there is a possibility that 20 questions can come from the business law. So what are the topics which covers business law? If you have your books handy, please make a note of it. It will come, it will help you when you're doing your revisions last minute and what topic covers which section. So business law is your regulation chapter 7 and chapter 8. So who performs indirect taxes? A practitioner or a preparer. Both can perform indirect taxes. Anyone who has the knowledge of indirect taxes can perform the indirect taxes. So even if I am not a CPA, but you are paying me to do your indirect taxes, I qualify under the definition of a preparer, and then I can do the indirect taxes for you. However, there are certain requirements for that. Usually, like if you are doing your sales and use tax, you don't need, any, like for enrolled agent and CPAs, we get, like for CPAs, there's a license number. For enrolled agents, they have a different numbers. So those are not needed. Usually when you do your sales or use taxes or you pay your franchisee taxes, you go to the state website and you can fill out the forms and pay the taxes for you. You actually do not need to have a specific qualification to do those kind of taxes. All you need is the knowledge. All right. Moving on to what else can be tested in your examination. You can be tested on the ethics, professional responsibilities, and federal tax procedures. Ethic is very, very important. Being a CPA, it is imperative that you are ethical. So ethics, professional responsibilities, and federal tax procedures plays very, very important role in the life of a CPA, because remember, you are being licensed to sign on your, on anybody's returns. If you go into the tax part, you are licensed to sign on the audit report. You are eligible to give, advisory services and so on and so forth. So if you are not ethical, just imagine the kind of harm that you're going to do for the society. I like to talk about ethics a lot, and I know people think that this is a lot of gyan that she is, passing on. But unfortunately, you do not have a choice, because ethics is part of our syllabus and heavily tested in the exam. You will have to hear my lectures on those and obviously study that as well. So ethics cover regulation chapter 6, topic 4, 5, 6, 7. Please make a note. Please make a note on your books if you have the books handy. So your ethics, your professional responsibilities, and federal tax procedure, which can be tested somewhere between 10 to 20% of your total questionnaires, covers regulation chapter 6, topic 4, 5, 6, 7. Okay, I'll just take up some questions here before I move on to the next. What is the return in income tax? What is the returns in income tax return? I mean, I'm not quite sure what this question means. Enrolled agent in US means tax return preparer in India? No. Enrolled agent means that you are a practitioner because you have done those specific qualifications to prepare the returns. So there, when we do the, when we do chapter 6, circular 230, I will explain you the difference between what is a preparer and what is a practitioner. Practitioner have higher standards than a preparer. Anyone whom you pay money to prepare your tax returns may not be a practitioner. You need to have separate kind of qualifications, like it can be an enrolled agent, a CPA, actuary, for them to qualify as a preparer. A practice. So the next question is: are we paying IT when we are getting return in income tax return? What is IT? Yeah, so all these. So basically, the tax is being regulated by the Internal Revenue Code, right? So IRS is the one who is laying out the rules for you to prepare your income tax return, and there are separate forms that you fill out and you submit those forms to the IRS itself, so that they can determine that you have prepared your return as per the regulations or the procedures that they have set up for you. So individual taxation, there are separate procedures. Corporate taxation, there are separate procedures. Partnership taxations, there are separate procedures. No, 1040 RR NR is not covered in our syllabus. We are only covering, first of all, let me make sure that we are covering only federal taxation. There is no state taxation that is part of your syllabus. And also we are covering, when we are doing individual taxation, the focus is on the regular 1040. We are not doing any other kind of 1040 like 1040 NR or SR. That's not covered in our syllabus. That's a good question, Mohit. So the Mohit's question is, what is federal taxation? Federal taxation, so in US, as you know, there are 50 states and each state has laid down their own rules and regulation. Except 5 or 6 states, most of the states have also levy state taxes on the people that are living on those states. So federal taxation is the taxation that is being levied by the IRS. And then on top of that, if you are staying in a state which has state taxes like California, then you will have to pay state taxes as well. All right. But because there are 50 states, we cannot cover all those 50 states provisions to see how the taxation is calculated for those 50 states. We are only going to focus on the federal tax. Nitya, I am not sure if I can answer that question as yes, because honestly, I'm not aware of how the central and state taxes are calculated in India. Yes, absolutely, Shatabdi. If you are staying in California, you will have to first determine your taxes as per the IRS, the federal tax, and then you will also have to determine how much you have to pay for staying in that state. So California is one of the states where the state taxes are really high. So you end up paying state taxes and federal taxes, and there are many more taxes which we'll be covering, in our syllabus. We do not have questions for 54, 71, 88, 65, 88, 58. Please be mindful that these are international reportings. We will not be covering international reportings in so much of details. There are some basics that would be covered, like what is guilty, what is foreign tax credit, but we are not going into the forms and maths of 5471, 8865 and 8858. I do it real time because that's a part of the compliance work, but that's not needed. That's not something that is covered for our syllabus. Federal tax applies to all states, yes. Irrespective of whichever state you are staying in, Ankit, you will have to pay federal tax. And Pranay, indirect tax is separate. When I say state taxes, that is a direct tax for the individual. So they are paying state taxes. So let's say the federal taxation is 20%. The state that they are staying in, California, they have 9% tax. So on the same income, they are paying federal taxes, and on the same income, they are paying state taxes. So it's not an indirect tax, that's a direct tax that we are talking about here. And as I mentioned here, that our syllabus only covers the direct taxation part. Yes, don't worry about state tax laws. There won't be any questions from there. Eventually, when you study the entire syllabus, you will see that there are a lot of, no, don't get confused here. Individual taxation that we are doing is part of federal taxation. Now, federal taxation covers a lot of taxes, right? Depending on the kind of entity you are, you will be taxed. Like if you are an individual, you will have a different tax structure. If you are a corporation, you will have a different tax structure. If you are a partnership, you will have a different tax structure. But all these tax structures fall under the federal taxation. All right. When we talk about individual taxation, that means if you are an individual, how the federal taxes will be calculated. Federal employment taxes, self-employment taxes are federal taxes, but they are fixed because the state taxes changes over the different states. However, the self-employment taxes are fixed. So there is the Medicare and the Social Security, and it's fixed on the federal income. Guys, please don't get too much hung up on the federal taxation, on state taxation. I would not like to spend too much of time on explaining state taxes, which is not even part of our syllabus. So can we just focus on what we have in our syllabus? All right, let's not get carried away for the topics that are not there in our syllabus. I think I've given you much explanation on what is state and what is federal taxation. Okay, let's move on. As I was mentioning, ethics, professional responsibilities, and federal tax procedures. These are your regulation chapter 6, chapter 4, 5, 6, and 7. All right. Circular 230 being the most important because it lays down a lot of ground rules specifically for us as a CPA and what is expected out of us. If we do not abide by those rules, then the second topic, which is the professional responsibility and the preparer's penalties, would apply. Then the federal tax procedures. Federal tax procedures, again, this here we will be covering a little bit about how the cases work in United States. So let's say, you are levied a tax and IRS says that either you have to pay a higher tax or a lower tax. Well, if it's lower tax, I don't have an issue. I'm happy because I'm going to get a refund. But if they say that you are required to pay higher tax, you have the option to contest it. Now, where do you contest it? If I have an issue, where do I contest? Obviously, see, I'm having an issue with the IRS itself. I am not agreeing to what they are saying. Exactly. And Ganapati was bang on, that's the tax code. So in US, there is a specific internal, Rajat, IRS is Internal Revenue Service. The full form of IRS is the Internal Revenue Service. All right, so in US, there are separate court, which is known as the tax court, where all the tax related issues are being heard. There are, judges who are tax professionals who have been practicing tax and law for a long time, and all tax court cases revolves under the issues if we want to contest something wherein we do not agree with the IRS. So in the court there are two parties. One is you, and who is the other part? Correct. Absolutely correct. Internal Revenue Code. So someone just asked in the panelist that, what is the purpose of Internal Revenue Service? So Internal Revenue Service is a body which lays down the rules and regulations and the revenue code by which you determine how a certain item will be treated. So let's say if Internal Revenue Code wants to list down the gross income, it will be under section 61, right? So section 61 will explain what all item will be included in the gross income. So IRS is the body which lays down the rules and regulations basis which you will have to determine how to calculate or determine the treatment of an item, and likewise whether it's includable or not includable in your tax return. I would say yes to that, Vandana. I mean, which is, I'm really sorry, I'm very poor with the Indian taxation because I've never done a CA. So which is the body which governs the Indian taxation? Is it the CBDT? Okay, excellent. This is something that I learned new. So thank you so much, Vandana. Okay, now let's move on to what all can be tested. So federal taxation. Remember, federal, I'm always using the word federal. Federal taxation of property transaction. Now, property transaction, this can be tested somewhere between 12% to 22%. Which are the chapters which covers that? It is Regulation Chapter 3. So Regulation Chapter 3 covers the federal taxation of property transactions. Now, this is a question to the panelist. What are the different ways to acquire a property? Okay, Manish, that was a good answer. Inherit, buy, gift. Okay, excellent. I think I have got all my responses. Ekta, like-kind exchange is very limited now. That's only now, available to a particular kind of property. But yes, these are the three ways by which you can, for our exam per se, we would be covering the property, how if we buy the property, if we inherit the property, and if the property is gifted to us. All right, so that can be tested somewhere between 12 to 22%. Federal taxation of individual. You can have a testing of up to 15 to 25%. Remember, it's 15 to 25%. And let's say if you have 100 questions and 25% comes from individual taxation. So, and if you get all of them right, there is a bright chance for you to clearing and scoring that golden number of 75. So Regulation Chapter 1 and Chapter 2 covers the federal taxation for individuals. Then we have the federal taxation for entities. This can be tested somewhere between 28 to 38%. And these are your Regulation Chapter 4, Regulation Chapter 5, Regulation Chapter 6, Topic 1, Topic 2, and Topic 3. All right. I hope that everyone has made a note of what content area can be tested and what are the different topics which pertains to those content area. I will just repeat once again, if you are, if it's professional responsibilities, it can be tested somewhere between 20%. It's Regulation Chapter 6, Topic 4 to 7. Business Law is Chapter 7 and 8. Federal taxation for property is Chapter 3, which can be tested, anywhere between 12 to 22%. Federal taxation for individual is Chapter 1 and 2, which can be tested anywhere between 15 to 25%. And federal taxation of entities is Chapter 4, 5, Chapter 6, 6.1, 6.2, 6.3, which can be tested anywhere between 28 to 38%. So this is our entire syllabus. So Bhavna has a question here that how much is allocated to Chapter 6? I would say Chapter 6 is very important because you have part of, taxation for entities, and the part of your chapter is which covers ethics, professional responsibilities, and federal tax procedures. So there are two components to it. If you want to know how much ethics, then it is chapter 4 to 7, which can be tested from anywhere between 10 to 20%. And business taxation for entities, it can be tested between 28 to 38%, but it is not only chapter 6, topic 1 to 3, but it also covers regulation chapter 4 and chapter 5. Okay, financial management knowledge, will it be useful in CPA? No knowledge is waste. All the knowledge is equally precious. How that will be applicable in CPA, Faisal, you will attend all the lectures and you will come back and tell me how you were able to apply your financial management knowledge. Absolutely. Even if you have no knowledge of the CPA regulation, which I assume none of us will have, because this is a different topic altogether. There are different verbiage we would be remembering. There are different terminologies which we will be using. So even if you have zero knowledge, you will still be able to clear this exam. So I think we have covered all the important questions, on the introductory session. We have just half an hour, so I would like to start with our first session for today, which is individual taxation. Remember that this is covered a lot in details for the CPA exam per se, because we have two topics, which are being covered here. I mean, we have two chapters which covers individual taxation. So we will start with our first topic. Rajat, maybe we can take that up later and move on to the topic now. After the class, I can take up this question. All right. Now, this formula is the basic. Please by heart this formula, because what we are eventually going to do is break down these components of the formula and understand what is included in gross income. Okay, I will increase the font. Is it better? All right. So this formula is very important because, we will drill down to each component to understand what is gross income, what are adjustments, what is adjusted gross income, standard deduction, itemized deduction, so on and so forth. But this is the basic. Like when you build a house, you put the pillars. This formula is the pillar for the foundation. So you need to know how to calculate the individual taxation based on this formula, and then understand what are the components of these formula. So gross receipts is, if you see the first topic, we have R2 and R3 just covering the gross receipt. Why do you think we have two modules just covering the gross income? Why it is so important? Why IRS is so keen for you to know what is gross income? Exactly, right? Because IRS wants us to know all the different kind of incomes that we earn, which is taxable in the eyes of the IRS. So gross income, when we cover chapter 2 and chapter 3, we will be seeing what income needs to be included. We will also see what income needs to be reported but does not need to be included to pay taxes on it. Remember guys, whenever there is a law, there is an exception to the law, right? So when we are doing gross income, we will see generally what are the components which needs to be included in the gross income. And then we are also going to focus on the exceptions. That means certain income which is not, it's an income for you, but you do not need to report it. Then we have the adjustments. This is mostly known as above the line deductions. And after you minus these adjustments, you get the adjusted gross income. Adjusted gross income is a very, very important number because it helps you to determine certain, it's a base that is used to determine whether you will be able to take certain credits or deductions or not. So this is like kind of a number which is used to determine the thresholds or the phase outs. We will cover that in details, adjustments, everything will be covered in details. I am just giving an overview here. Okay. After you have the adjusted gross income, guys, do not panic. We are not skipping anything here. I am just giving you a walkthrough of the structure. Gross income adjustments, AGI, standard deduction, itemized deduction, QBI, federal tax, tax credits, and payments. Everything is covered in greater details, and we will eventually cover everything. Right? What I'm trying to explain here is just the stuff. Okay. Then we have, once you determine what is your adjusted gross income, you have two options here. Either to take a standard deduction or to take an itemized deduction. Now, let's say, standard deduction in India, like for person who is employed, I think we get a 50,000 lump sum deduction. It's 40,000 or 50,000 if I'm not wrong. Right? So standard deduction is similar to what we get in India. You can either take that deduction which is determined by the IRS, or you can take an itemized deduction. So people, this is the option that the IRS gives you. Now, as a CPA, you will have to determine for your client which will be more effective. Whether taking a standard deduction will help them save taxes, or whether taking an itemized deduction for them to save taxes. Since I work for Deloitte, I don't have any poor clients who take standard deductions. All my clients are taking itemized deductions. So itemized deductions are for the people who incur higher level of expenses. This again will be covered in great details, right? After you either take a standard deductions or itemized deduction, you arrive at your taxable income before the qualified business income deduction. Now, qualified business income deduction was introduced by the Tax Cut and Jobs Act under Section 199A. I will provide separate notes on the calculation of QBI, and this will be covered, like I will be covering all these topics based on the formula that is listed here and not by how it is given in your book, so that you can relate to all the components that are given in this formula. So qualified business income deduction was introduced by the Tax Cut and Jobs Act under Section 199A. Now, what is that? What do you have to remember, Radhika? Can you be more specific with your question? All right. So, yeah, you will have to remember this formula, but you may not have to remember the, the different rates and stuff. As and when we do the topics, I'll let you know what you need to remember and what you don't need to remember. All right. So qualified business income deduction is a lump sum deduction of 20% which you get if you have invested in businesses which are regular trade or businesses in the United States, and they have let's say, for example, you invest in a partnership which is in the business of regular trade or business. A QBI is qualified business income. The full form of QBI is qualified business income. Okay, so it's a 20% deduction. So deep meaning will be covered later, not now. So you get the 20% deduction on the qualified business income, and that's how you arrive at your taxable income. Once you arrive at your taxable income, that means on this income, you will have to pay taxes. Then you determine, you multiply the taxable income on the tax rate that is applicable for you. So in today's class, we will be doing 4 filing status. So based on whichever filing status you fall in, we will be doing 5. So whichever filing status you fall in, the tax rate will be determined for you. And then you will, once you multiply, let's say my federal taxation is $100 and my tax rate is 10%. So my federal taxable income is $10. Then I will determine what are the tax credits that I can take. Again, tax credit, we will cover a lot in details. There are refundable credits, there are non-refundable credits. So the tax credits will reduce your federal tax liability dollar by dollar. Now the panelists here, can they explain me what is the difference between a deduction and a credit? Okay, Bhavya, this is something that I would like the panelists to answer. What is the difference between a deduction and a credit? I will answer if people are not able to. Okay, somewhat correct. Okay, someone correct. So here is the difference between a deduction and a credit. The deduction helps you to, yes, Mohammed, you are bang on. I like your answer. Yes, most of the panelists, you are almost, have got the concept correctly. So deduction helps you to reduce your taxable income, but credits reduce your tax liability dollar by dollar, right? So the tax credit will have a greater benefit than a deduction in a general scenario. However, there are exceptions to this scenario, but generally speaking, tax credits reduce your tax liability dollar by dollar. However, deductions reduces your taxable income. Also, from here, you will add on any other taxes like your self-employment taxes. You will always, once you've determined your federal taxable liability, you will also deduct any taxes that you have already paid earlier. Like people who are working professionals like us, TDS is deducted, right? In US, it is called withholding of taxes. So withholding of taxes happens on their form W-2, and that is also, it's not a credit, but it's like you have already paid taxes on that income. So you use that amount to reduce your tax liability. And then if you have more taxes to pay, you have a tax due. If you have overpaid, then you have a refund. So if you see withholdings, estimated taxes, excess social security taxes, and if you had paid, in US, you have the option to either take a credit or to apply the excess payment to the next year taxes. So if you have, applied an over, let's say in 2018, I have overpaid $200 extra. I don't want a refund for that, but I want to apply the $200 to the 2019 tax liability. So that will also reduce my tax liability for 2019 by $200 because I overpaid that taxes in the previous year. Yes, Bhavya, withholding taxes is something that you've already paid. It is like TDS in India. Like when we are salary, TDS is deducted. Likewise, people who are employees there, they have these withholdings that is done from their form W-2. Form W-2 is the form that is issued to the employees by the employer, and all the tax information is given here. So remember that this is the basis for the foundation of the formula of how to calculate the tax liability. And then we will get into the components of each, components of the formula. Like we'll get into what is gross income, adjustments, AGI, and all the others. So I am just keeping the chat window on the other screen so that I can scroll through this syllabus. But we have a question from Mohit. Guys, you will, one request here that please stop comparing US taxation with Indian taxation. Please do not confuse yourself. Wherever needed, I will provide examples, but you don't need to do yourself. And, there is no comparison here. If I think something is relevant, I will give you examples, but don't confuse yours. Vasudha, Vasudha has asked, how do I know if I have paid excess in the last year? When you file your tax return, you determine your tax liability. So if you have already paid excess, then obviously you will know how much you have paid excess in last year. And then you can apply that excess to the next. All right, so let's look at the components here of the gross income. So what all comes in the gross income? We have wages, interest, dividend, state tax, refund, alimony. All this will be covered in great details, but they have just given a just here, like, what are the components of gross income? What are adjustments? This is a very important concept, adjusted gross income. And these adjustments are also known as deductions to arrive at AGI or above the line deductions. IRA income means individual retirement account. So usually, they set up individual retirement account. So if you make any payments to those accounts, there are 3 different kind of IRA that we will be covering in our syllabus for the CPA exam. For one IRA, you get a deduction. For 2, you do not get a deduction. So those deduction is a part of your adjustment. Then you can take a standard deduction or you can take an itemized deduction. And under itemized deductions, these are the different components that comes into it, like medical taxes, interest expenses, charity, which again we will be covering in details. It's not so simple. I cannot just say that it's medical expenses and you can take it as itemized deductions. There are different thresholds that you have to meet. There are different requirements that you have to meet in order to claim something as a medical expense. All right. And then we have the taxable income. Again, we get the qualified business income deduction, which is 20% of that income. And then we arrive at the taxable income. There are separate provisions for alimony. When we go into the alimony, you will see that any alimony, any divorce agreement which were executed after 12/31/18, if you are receiving the alimony, you don't need to include it in your gross income. Someone who's paying the alimony will not be able to get a deduction for the same. However, if you are preparing an amended return for 2018 or 2017, or you are preparing a return for someone who has not filed for those years, and they have alimony payments, you will have to be mindful of the date. So this is again a change which was done by the Tax Cut and Jobs Act. Alimony is a concept that's there in US. I mean, how many people don't know what is alimony? Yeah, so looks like a lot of people don't know what is alimony. So let me put it across. Yeah, exactly. So let's say me and my husband gets married, and I anticipate a very happy and prosperous life with him, but he's a jerk and I don't like him, and now I want a divorce. All right, because I want a divorce, he doesn't want a divorce. He may ask me to pay alimony to him. Usually it's the opposite way. It's the men who pays alimony to the female. But let me not be gender centric and say that I have to give alimony to my husband, all right? Because of the divorce that I am filing with my husband. It's kind of a maintenance money, or it's kind of a money for screwing up my life, if I have to put it in that way. It's the money that I'm paying my husband for screwing up his life. So those are the kind of alimony. That's like a penalty for a divorce that one spouse pays to the others. Okay, now we get into our main topic for today. Filing requirements for individual. Who must file, when to file, and filing status. All right? Who must file is that anybody who has an income which is greater or equal to the sum of the regular standard deduction and additional standard deduction. So now you can ask me, ma'am, how do I know what is the standard deduction? Isn't it? I've lost my, 1 second. Pradeep, alimony definition is always applicable for a person who's getting divorced. Child support is something that is also, is part of a divorce. Like, if I have a child with my husband and I want him to pay for his support, then that's called child support, which is a separate concept than alimony. Alimony is basically paid to the spouse, and child support is for the, if you have a child, you are paying money for the child support. So that's a separate. Okay, jokes apart. So that's a good question. What is a K1 income or loss? So there is a concept of flow through entities in US, which again we will cover in greater details. Flow through entities issue a kind of form to their investors or their partners, which is known as the K1. So they pass on the income in the same character they earn it, right? So if it is a capital income, it will be passed on in the form of capital income. If it's a ordinary income, it will be passed on as an ordinary income. So when I go over the K1, you will see that there are line 1 is an ordinary income, line 2 is a rental income, line 3, I don't remember, line 4 is a guaranteed payment, line 5 is interest income, line 6 is dividend. So they pass on the income in the same character as they earn it, because flow through entities means that they are flowing the information from their level to the partner. The income is not taxed at their level. So they issue a K1. A K1 can be issued by a partnership. A K1 can be issued by a S corporation, because S corporation is also a flow through. However, it's an hybrid structure which has the characteristics of a corporation and a partnership. A K1 can be issued by a trust. A K1 can be issued by an estate. So these are the different kind of entities that can issue you a K1. Now, what is a K1 income and loss? That's again a big question, because K1 income has different categories of income to it, right? They can be ordinary income, capital income, rental income. So how do you fit those income into the different kind of forms? We will cover that later. But to answer you, K1 income is the income which you get from your flow through entities in which you have invested, like partnerships or S. All right. Let's get back to our basics. Let's know the basics first, and then we can get into these questions, guys. Please know that this is our first class, and I really appreciate all these questions coming from your end. But let's go by the structure. Let's understand the basic first, and I will make sure that all these questions are answered. Okay, who can file? As I know, if you have income which is more than your regular standard deduction, then you should file. Now, my question to the panelist is, how do I know what is the standard deduction? If I give you this as an open-ended question, can you find an answer to it? Guys, I know you are a smart lot. There are 85 participants. Excellent, Chirag. Excellent. Thank you so much, Satish, Vasudha, Radhika, and Ekta, Chirag. I mean, obviously, you can find this information on the IRS publication, right? And also, it is equally important for you to know what filing status you have. Radhika, you are bang on, because if you do not know what's your filing status is, you wouldn't know what is the standard deduction that is available to you. Ankit, yes, IRS will, issue the standard deduction every year because it is subject to inflation. So they will increase it by $100 or $200 every year to, adjust it for inflation, right? So what kind of standard deduction is applicable to you will depend upon your filing status. So I have a small note here, which I picked up from the IRS publications. So if you are single and you are under 65, your standard deduction is 12,200 for the year 2019. I'm being very specific of the year, because if you are writing your exam in 2021, please do not use my notes for these numbers. They will be redundant for those years, and there would be new numbers here. All right. If you are married filing jointly, your standard deduction would be 24,400. If you are head of household, it is 18,350. Qualifying widower use the same tax brackets and standard deductions as married filing jointly. Now, what are these filing status is something that we are going to cover next, right? When to file. Before I move on to that, is everyone okay with the font? Do I really have to zoom it so much? Okay, yeah. Standard deductions is important, because these are only 4 or 5 numbers, and I would definitely like you to remember those numbers, right? Let's say, you have an income which is below the standard deduction. Do you still think that you may have to file? You do not have an income wherein any taxes are required to pay. Do you still feel that you may have to file? Okay, well, some of them have answered yes, some of them have answered no. But I did get an answer from someone saying that with the reasoning, yes, it is optional for all. Like, some of them have answered that it's optional. Well, that's partially correct. But let's say that I do not have any tax liability this year, 2020. And I'm filing my taxes 2020, you will obviously file in 2021. But what, because in 2020, I did not have any tax liability because I lost my job because of COVID situations and whatnot, and it could be for any reasons. But what if I had paid over taxes, overpayment in 2019, and now I would like to get a refund? Or let's say I'm in a situation wherein my business is running into losses and I am able to use my net operating loss, okay, which will reduce my income from the other components, let's say wages, and I might get a refund for the overtaxes that I have paid on the other kind of income. Then it is strongly recommended that you still file a tax, because if you do not file a tax, you will never be able to get that refund. There are certain times wherein you still have to file the taxes. Let's say you are a sole proprietor, all right, and for the next for the past 3 years you are having losses which you are not able to take against the other income, because you don't have and you are not generating enough income. But those losses can be carry forwarded and can be mitigated against the income or the profits that you have in the future years. So if you do not file a return, how is the IRS going to know that you had losses for those years? All right. So these are some of the reasons wherein even if you don't have a tax liability, you should still file a tax. They do. We have a question here that does IRS don't refund taxes? They do refund the taxes. In fact, IRS refund policy is really nice. You do get the refund within 21 days of applying for it. But as I mentioned earlier, that you either have the option to take a refund or to carry forward that excess payment to be applied in the future years. All right. Now, what is the due date for the individual to file the taxes? Please make a note here that you file your taxes on Form 1040. When do you file the taxes? It's on the 15th of April. You do get a 6 months extension by the IRS by filling out the form 4868. However, you do not get an extension to pay. That's just an extension for you to file your return, but you still have to pay whatever is outstanding by the 15th of April. What happens? Maham Kali is asking me why IRS gives extension. Well, that's a very good question. Let's say people don't have their books and records ready. You may have invested in a lot of companies which have not issued you the K1s by April 15th. Then how do you determine what is your exact income? So that's the reason they give you an extension to file your tax, but they do not provide you for an extension to pay the tax. No charges for extension, guys. Yes, Uday. Because of the COVID situation, the extension due date is July 15th for 2009. The extension is to file, guys. The extension is not to pay. Okay, so that you make sure that you have all the information that is required for you to file your taxes. For all the businesses, they provide extensions. For partnerships, corporations, estate, everyone, they provide extensions. So if you are a person who is getting the information from these kind of entities, if they do not provide you the information by the due date, then you have the additional 6 months to gather that information and file your taxes correct. Yes, the form is 1040. Mohit, the extension is also available for the businesses. It's not only for individual, but the extension is also available for individual. Let's move on to the filing status. Now, there are 5 filing status in the United States under which you can file your return. Now, why do you think we have 5 different kind of filing status? Think like a tax professional. Why do you think they have 5 different kind of filing statuses? I know we are running a little bit over time. It's 9:34, but please bear with me. We will finish this topic and then only leave for the day. Excellent, Meeta. That's correct. Because there are different slabs that determine what kind of rates that you can choose based on your filing status. So the most lucrative tax slab is for the joint individual filing, married filing jointly, and the least lucrative is married filing separately, right? So there are 5 different types. Single, if at the end of the year your status is single, then you file your return as single. So let's say if I get divorced on December 31st, then I will file as single. Though it is on the last date of the year, the last date of the year will determine whatever my status is. Yes, Faisal, you can do that. However, if you have, so we have a question here from Faisal. Can we file returns for previous year at this year? If you have not filed a return at all, then you can definitely do that. there could be some penalties, because there could be failure to file penalty and failure to pay if there is any tax liability. Amended return ekta is when you have already filed a return and you are amending the filed return, right? But if it's a new return, it's not necessarily means that it is amended, even though it is for the previous years. Correct. So now in 2020, we are filing the tax return for 2019. All right, so that's the reason we are reading the standard deductions and everything for 2009. Joint return, obviously, if you are married at the end of the year, even if it is on 31st of December at 11:58 p.m., your filing status is married, and then you file a, married filing joint return filing status. Married filing separately, this is the least lucrative slab, I would say, because you are married, but still you chose to file two returns, which is extra work for the IRS. So because you are doing so, they don't give you a lot of deductions and credits. Now, can anyone in the panelists tell me why would a person, as being married, would still like to file it separate? Okay, I like Jeet's response, because it says sore relationship, trust issues. Well, I will put this chat window here and increase it a bit, because these are some excellent responses. There are no benefits in individual taxation, more usually if you are married filing separately, because you have the least lucrative tax slab, and you don't get a lot of deductions and credits. But yes, these responses are bang on. Let's say I am a criminal. My husband definitely wouldn't like to file with me. I'm carrying a gun with me and I'm not allowing him to divorce me. His status is still married, right? Because I'm not allowing him to divorce and I'm a gangster. But he would still like to file his taxes, and then he may file as married filing separately. Let's say I am a person who gambles a lot and I have a lot of debt. So what happens in that scenario? Again, my husband may not like to file with me. Trust issues, illegal income. I mean, these are some great responses. Exactly for those reasons, you are married, but you would still like to file it separate. Okay, qualifying widower and head of household. These are the two very important filing status, which I would like you to pay attention. All right. Guys, I know I am over time. Does anyone has any issues if I continue for another 20 minutes to finish this topic? Are you all fine with me continuing for 20 minutes to finish this topic? Okay, cool. Thank you so much. Okay, great. Thank you. Thank you so much for your responses and patience. I really appreciate that. So let's continue now. So what is qualifying widower? Qualifying widower, they have the same tax slabs as a married filing jointly person will have. So that means that they get the best tax slab. But to be a qualifying widower, there are certain requirements that needs to be met. First is that the person who is a widow or a widower does not remarry for 2 years, and the person provides for the dependent child, and that child stays with the taxpayer for the entire taxable year. All right. To give you an example, let's say my aunt and my uncle, they are both couple, and my uncle passes away in 2019. So in 2019, their filing status will be married filing jointly, because my uncle was still alive in 2019 and he passed away somewhere, let's say in Feb or March. So for that year, my aunt will still file as married filing jointly. Now my aunt has a son who is 15 years old. My aunt is providing, more than 50% of the cost for maintaining the household. Like she's paying the rent, she's paying the food, she's, paying for utilities and taxes, house taxes. And the son is staying with my aunt for the entire taxable year. All right. So if she meets these two criteria and she does not remarries in 2020 and in 2021, her filing status will be qualifying widower. And in 2022, if the son still qualifies as a dependent child, then she cannot qualify as a qualifying widower, but she can qualify as a head of household. All right. Please be very, very clear on these concepts. Let me know if I was not able to make sense and you want me to repeat. So qualifying widower has to meet two requirements. One is that you do not remarry for the next 2 years. See, in the year the spouse passes away, you are anyways eligible to take the filing status as married filing jointly. So in the year the spouse passes away, I don't have to determine anything. I don't even have to see whether I have a dependent child or not. That year is simple. But the next year and the next to next year, if you do not remarry and you provide more than 50% support for your dependent child, and the dependent child stays for you for the entire taxable year, you are eligible to file as qualifying widower because you have met both the test. You have met the test that you have not remarried and you are providing for a dependent child who is staying for you for the entire year. Now, dependent child includes an adopted child, but it does not include a foster child. Foster child, like to give you an example, it would be like someone, let's say, when we have these war zones in Syria and stuff like that, and they rescue some children and then they put these children in your house as a foster child, then that child does not qualify as your dependent child. But if it's your adopted child or if it's your stepchild or your surviving spouse child, then that qualifies as a dependent child. Okay, give me a second here. I have some questions on the chat window. Let me go over it. Gurmeet, we have a question here. She's asking the age of the child. So we will see who qualifies for a dependent child in the next page. So what is the definition of the dependent child will be covered in the next page. But to know whether you will qualify as a qualifying widower or not, first know what is the requirements to qualify as a qualified widower. Then we will move on to the second topic, which is who qualifies as a dependent child. Okay. If the student is studying abroad or in a city, temporary absence is allowed. Then again, that is an exception to the law, Vasudha. But remember, we are covering only the basics here. So we will not go into the exceptions, and that is not needed for our exam per se. But if you want, you can go to publication 501 of the IRS and see what are the different exceptions listed, wherein even if the child is not staying for the taxpayer, they will still qualify as a dependent child. But for our CPA exam per se, we don't need to know. See, even if there is a birth or a death in the taxable year, you would still consider that child as a dependent child. Right? So let's say the child was born on March 2019. He's not staying with you for the entire taxable year, right? Because he was not born only. He was born in the month of March. So from March to December, if he stays with you, though it is not in the entire taxable year, he will still qualify as your dependent child. Okay, so remember one thing which I told in my class earlier, that qualifying widower gets the same tax rate as a married filing jointly. If you marry, then obviously your filing status will change, right? From qualifying widower, it will be to married filing jointly. You will have to meet, Ananya, you will have to meet both the tests. For the qualifying widower, you have to be unmarried for 2 years and you have to support a child for more than 50% of maintaining the household, and the child has to live for you for the entire year. Then only you will qualify as a qualifying widower. As simple as that. Right? What is the definition of dependent child? We will cover that in the next page. But are we clear what are the requirements that is needed for the qualifying widower? I don't think it is that difficult for you to understand, right? I think it's really simple. You don't remarry for the next 2 years and you provide for a child who stays for you for the entire year. That's all. Okay, let me take this question from Vasudha. If a spouse passes away in 2019 X March while filing taxes for 19, can the widower file joint return? Also, and I have already answered this question in the class, Vasudha. I gave my example based on this scenario itself. I will repeat again, but please be, attentive in the class. Please do not make me repeat stuff. So if a spouse passes away in 2019, my filing status will be married filing jointly, irrespective whenever my spouse passed away for that particular year. For 2020 and for 2021, if I do not remarry and I provide more than 50% of the cost for maintaining the household and the dependent child stays with me for the entire taxable year, I will be able to qualify as a qualifying widower. Okay, what if he remarries in 21? What do you think it will be the filings? If you remarry, what does your status becomes? Correct. Because you are married now. You are no more a widower. You have married. So your status will change. And it's the same tax slabs that you get for a qualifying widower or a married filing joint. All right. So this is a kind of a benefit that the IRS is giving you because of the loss that you have in your life, so that they are giving you a better tax brackets, so that you are already mentally depressed. They don't want to financially depress you more, so they are giving you some leeway here. Okay. Can I move on to the next topic, head of household? Are we good here? Okay. Now for head of household, there are three things that you need to keep in mind in order to qualify for head of household. Now let's say that I am single, but I am taking care of my parents. I am single, but I am taking care of my stepbrother who is left with no one but just for me. Okay. So these are these are some of the scenarios where you're not married, but you're single, but you are helping someone to, raise, or you have a dependent whom you are taking care of. Then there is another filing status that you can file for, which is known as the head of household. Faisal, these concepts are new to everyone. It will take little bit of time for us to digest these concepts, but try to read. Like, the more you read, the more you familiarize yourself, the more confident you will be. These concepts are new to everyone, but try to understand what I'm trying to say. All right. So head of household, you have to meet certain conditions to qualify for head of household. Now, what is the benefit of this? You get a little bit of better slab, that, the tax rate slab, which is given to a single or a married filing separately. There is no age criteria for head of household. Okay, we don't consider age criteria for any of these categories here. So head of household is a filing status which the IRS provides you if you are trying to help a dependent who is dependent on you to live their life. So you get a little bit of better tax bracket than single or married filing jointly. However, to qualify as a head of household, there are certain criteria that which needs to be met. The simple way to remember is that you do not fall under any of the other filing category. That is, you are not married, you are not a widower, and you are not a non-resident alien. What is the meaning of non-resident alien? That's the question to the panelist. What do you understand by a non-resident alien? Okay, those are great responses. Yes, okay, let me share the chat. Okay, thank God I didn't get a response wherein people said alien who has come from different planets. I was not expecting also, just a little fun here. All right, yeah, that's correct. So if you are not a US resident or a citizen, then you do not qualify for the status of head of household. So first thing is that you are unmarried, you do not qualify under a qualifying widower category, and you are a resident alien of United States. Now there is a difference between a resident and a citizen. Even if you are not a citizen, but you meet the qualification of a resident, which can come by two ways. One is that you are a green card holder, or you meet the physical presence test, which we will cover later, then you become the resident of that country and you're liable to pay taxes in the United States. So as long as you are not a non-resident, you can qualify for head of household. And the fourth very important point is that you are providing for more than, uh, maintaining a household for your dependent child, parent, or relative for more than 50% of the cost, and that dependent child or relative is staying for you for more than 50% of the taxable year. There are certain exceptions to the person that needs to stay with the taxpayer and who doesn't need to stay with the taxpayer, which again we will cover a little bit later. But to remember what are the different requirements, first is that you should not fall under any of the categories like single, married filing, separately, qualifying widower. You should not be a non-resident alien. And the fourth is that you should be providing more than 50% of the support, and that should be the primary resident of your dependent child, parent, or your relative. Mohit, that's a good question, how the cost is determined. So Mohit is asking, how do I know what is the cost that I need to consider in order to determine that, those are considered in the cost for maintaining the household. So I have a chart here for you. These are the costs which will help you to determine what kind of expenses are considered for keeping up the house, like your property expenses, mortgage interest expenses, rent, utilities, repair, property, food eaten in the house, and other household expenses. All these are different components which are considered as expenses to satisfy the support test. I will share these notes at the end of the class, but yeah, that's a good question. But before we move on to that question, first let's understand what will help us to qualify for that status. One very important thing is that you should not be, qualify under any other filing status. And then you have either a qualifying, dependent child or a dependent relative who is staying with you and you are providing more than 50% of the support. It's Ankit, it's 50% and more than 50% of the support, and the person has to stay with the taxpayer for more than half of the year. However, there are certain exceptions to it. Qualifying child and dependent child are the same. We are going to cover this qualifying child here. Okay. So what is a qualifying child? A qualifying child definition can be separate for a head of household. The qualifying child definition can be separate for the qualifying widow. Child, stepchild, legally adopted child, foster child, brother, sister, or a dependent of one of these who meets the definition of dependent under the qualifying child rules. But when we were doing the qualifying widower, it specifically mentions that foster child is not a dependent child. Okay. So if you are doing a qualifying child test for the widower, and if you see a foster child, that wouldn't qualify you for a qualifying widower, but a foster child can qualify you for a head of house. Now, these are the people who qualify as a qualifying child. There are other requirements as well. There is the age requirement, there is the residency requirement, which we will cover in the next page. What if you are supporting your parents? They are not required to stay with you. You know, sometimes like in US, it is a very common concept that they keep their parents and grandparents in nursing home. So if you have dependent parent and you are providing more than 50% of the support, they do not necessarily have to stay with you in your primary residence. They can stay in a nursing house or somewhere else, and you can still qualify as a head of household status. And then there is dependent relative. So dependent relative means that they are related to you in some way or the other. Like can be your brothers, sisters, niece, nephew, uncles, your sister-in-law, brother-in-law, they all qualify as relative. And the dependent relatives must live with the taxpayer at least for more than half of the year. But let's say you you are not a relative, but you are staying for the taxpayer. You are staying with the taxpayer for more than half of the year. Do you think you will qualify for head of household status? Let's take an example of a girlfriend and a boyfriend. So I have a boyfriend who is staying with me for the entire taxable year. I am providing for all the rental expenses. I am providing for the mortgage. I am providing the food in the house, clothing, everything. Will he help me to qualify for the head of household status? No. Why? Because the boyfriend or the girlfriend is not related to me. All right. So here is a small pass key that the list of the relative is given here, Mayank. So this is the entire list. Uncle, aunts, nephews, sister-in-law, brother-in-law, all those qualify as your relative. Now this is a nice summary here for a qualifying dependent. If it's a head of household, then what is the requirement, and if it is qualifying widower, then what is the requirement? For a child, it has to stay with the taxpayer for the entire year. For a head of household, he doesn't have to stay for the entire year. If he stays with the taxpayer for half a year, he will still be able to qualify. The taxpayer will still be able to qualify as head of household. Parent, they are qualifying dependent because they are related. However, do they need to live with the taxpayer? No. That's an exception. They can live somewhere else. As long as you are providing more than 50% of the support, they can still help you to qualify as head of household. Relative, they are qualifying dependent. Yes. And they have to live with the tax. So these are the pass keys. Please read it to yourself while I'm sorry, it's 10 and we still have a little bit more to cover. Okay, we have a request from Farah. It's Eid here. Okay, let me do one thing. We will cover the dependency definition in the next class. But before I end this class, is everyone clear on what are the different filing status, and is everyone has got a fair idea how do you qualify as a qualifying widower, or how do you qualify as head of household? I can take up the dependency definition in the next class. No, Bhavna, in the head of household, there is no husband dying situation. But let's say if you have a child who does not meet the age test and who is not staying with you for the entire year, but you still are providing for the child support for more than 50%, and he stays with you for for over a half year, then you can still go for head of household status, and you can still get a better tax slab. Maintaining a household means that you are providing for these expenses: property taxes, you are paying the mortgage interest, you are paying the rent, you are paying the utilities like water bill, electricity bill, you're paying for any repair or maintenance, you are paying for the food that is eaten in the house. So all these are cost for keeping up a house, which can be called as maintaining a house or maintaining a household. Okay, guys, are we good here? Can we attend this session? Okay, can someone answer Kutubuddin's question? He wants to know what is wife died husband called. Please, panelists, answer Kutubuddin's question. Okay, here you go. Thank you so much. It was really nice interacting with you. I highly appreciate such an enthusiastic response and interaction in the class. Hope you like the session. We will continue with the remaining topic, dependency definition, in the next class.